Hey guys, Buzz Glover here, author of Business Loan Brokering 101 and the founder of BizLoanConsultants.com. I'm filming this fourth video from my boat, which is actually entitled Video 3 because the first video was an introduction. My boat's located down here in Oakmont, Pennsylvania. It's the home of the Oakmont Country Club, about a mile away from where I'm filming, and it's actually where they're going to have the U.S. Open this year. I hesitated filming it down for my boat because I didn't want to come across as business loan brokering being a get-rich-quick scheme, because it certainly isn't. It requires some hard work up front, but the hard work that you put in the beginning certainly pays off in the end through some very lucrative commissions from brokering commercial mortgage loans and from equipment lease loans. But I thought it'd be kind of cool to do it from my boat. The one thing I do want to tell you about the business is it does allow you some freedom as far as when you work. If you want to take an afternoon off and go golfing, or if you want to go do something, you want to go boating, you know, as long as you're getting your work done each day, you can kind of work your own schedule, so you're not kind of reporting to the man, and you're not, you know, having to live the daily grind. So in the first video, it was the introduction video. If you haven't watched it, you should go back. I kind of tell you a little bit about the business, how there is a need for business loan brokers in the marketplace, because banks are really, I read one study where they're declining 40% of all the applicants that come in. So right there, you're creating value. I've been doing this business, have been somehow involved in equipment finance or brokering loans for close to 20 years now. And if you haven't seen my book, it's available on Amazon, Business Loan Brokering 101. I just published it here in May of 2016. And you should get a copy because it fills you in quite a bit about the business. But like I said, in the first video, I go through an introduction of what the business is all about, how you can make lucrative fees, who the business is great for. And then I tell you that there's really only three things you need to do in this business. One is find deals, two is package them up for the bank, and three is send them off to the bank and kind of know which banks to send them to. And today's one of the more exciting videos, because in video, after the introduction video, in video 1, I talk about how to find deals, and I use an annuity approach to it. So if you haven't watched that one, go back and watch it as well. When I say an annuity approach, I show you a way that you can go out, create relationships, and have deals come to you, multiple deals each year, instead of just going out and finding one-off deals. In video 2, I show you, once you get a deal, how you contact the customer and you gather the information. And basically all you're doing is gathering the correct information from them based on the type of deal it is. And then in this video, I'm going to show you how to decide what banks to send it off. And it's kind of cool because most of this video is going to be done on my computer. I do use an approach where I go to local banks first, and then I go to national banks. Now, if you're marketing your business on a national basis, you're going to have to tweak this a bit, but it shouldn't be a big deal. If you guys are, if there's some internet marketers out there that want to do a national business, I don't see any problem with it. But I'll get into all that. Excuse me. I'll get into all of that in a minute. I'm going to take you down on my computer screen and show you some of the process that I go through once I package a deal on who I decide to send it out to. So thanks for sticking with me. If you're this far along in my videos, congratulations, because I think it's about to change your life and should really change the way, you know, your earnings and how you and your family live. So I appreciate it, and thanks again for joining me from Oakmont, Pennsylvania, home of the U.S. Open 2016. Thanks. Hey guys, I've just moved down into the hull of my boat, and it's probably a good thing because it's raining outside. You might hear that in the background. If you do, I apologize. Hopefully the audio will be okay for this video. But the rest of what I want to show you is actually really cool. It gets you into the inner workings of brokering business loans. It's kind of a behind the scenes. It's probably the first video that I'm shooting that really gets you into what this business is all about and how banks are out trying to find guys like you and me and girls like you and me to find them business. So I thought I'd start out with what happens, you know, the process. You know, I've already showed you how I originated deals. Now, if you want to originate deals a different way through some marketing, or maybe you do online marketing, that's fine. I just know the way that worked for me. But most of the business that I did was local to the Pittsburgh area market. maybe regional. I did some in eastern Ohio and northern West Virginia, but it was maybe a 100-mile footprint. So a lot of the business, once I would find the deal and then I would package it, I would take it to a local bank. And what I did here was, I'm going to go onto my computer here, and the first thing that would happen is once I would find a transaction and I would package it, now you have to decide what bank you're going to take it to. And in the beginning, when I first got started, I really didn't have anyone to teach me. As a matter of fact, I didn't go through any formal training as far as finding places to fund deals until maybe 3 years into me being in the business. That's when I spent $10,000 to go out to an outfit out in California and really the only reason I did that, I was pretty well entrenched and kind of knew what I was doing at that point pretty well. I just wanted to expand how many funding sources, because that's one of the keys to your business. But the point I was making is that when I first started finding deals, I would go to national funding sources because that's kind of the way I learned the business. But then I realized that the national funding sources in most cases would have higher rates than my local banks. And I started to learn who the players were. And what you'll find about local and regional banks in your city is that they'll go into equipment finance and then they'll go out of equipment finance. And that's where my mainstay was. Most of them will continue to do commercial mortgages. And the way you protect yourself with a commercial mortgage is you have an agreement with your customer that they're going to pay your 1% fee on the assumption that you're going to do a good job for them, get their credit approved and get it approved at a rate. But so I just pulled out of a CRM, a customer relationship management program, a list of all the local banks here in the Pittsburgh area and the western Pennsylvania area. Not all of these are funding leases. Some are and some aren't. And like I said, some used to and some got out of it. And it's just kind of odd in that respect that banks go in and out of this type of funding. In commercial mortgages, almost all of them will look at a commercial building because they just love real estate. So you get the deal, you package it, and now what you want to do, and it's going to take it a little while on a local basis to find out who the players are, depending on the type of deal you got. And so my first step was, and after I was in it, matter of fact, I had a lunch meeting for a $700,000 deal today, and the whole time I was sitting there, and it was coming from a bank who didn't want to do the deal. They were just trying to help their customer out. And my wheels were spinning the whole time. I'm like, oh, maybe this bank will do it. I'm thinking what banks, based on what he was telling me about the deal, I kind of knew what banks might have a taste for the business or not. So, but anyway, so I would take it out to local. You might, in starting out, might not be able to go locally. You might have to go nationally. So let's just say you get a commercial real estate deal. I'm going to show you a couple resources you can use as a commercial real estate loan broker. And if that's the niche you go into, you can use this on an ongoing basis. So in my case, I would typically go to a couple local banks that I know first, and then if I was having difficulty getting the credit approved, then I go out to these sources that I'm going to show you. Okay. What I'm going to do is I'm going to start out fresh on this. This is called the Scotsman Guide. And the Scotsman Guide is basically a trade magazine for commercial mortgage broker, commercial banking, commercial originators. So there's a whole trade magazine dedicated to exactly what you're doing. Now what you want to do is come down to commercial here and go to directories, and then go to commercial lenders. Now that's kind of interesting. Now they have even a little bit of a different thing here. They're going alphabetically with all of them, which is kind of interesting. But you can see, and maybe what you do, I can't tell you all the inner workings of how you find something, but I know that you can actually go in and pick in this area what type of property it is. Commercial property, a multifamily. Hard money means that they're looking for a certain type of loan. And construction. Then you can actually go down to state. Now, I did this earlier because I wanted to take you to a certain page. Most of these lenders that I'm taking you to will come up in your searches, though. So let me see here. Okay. This is kind of cool because and like I said, I can't remember all the criteria I put in, but I got 47 matches for the criteria that I put in on the Scotsman guide for companies that would be interested in funding a commercial loan that I found and I originated and I needed to find a home for. So you got Key Capital Mortgage here, you got Velocity Mortgage, you got Realty Mogul. Now, one other cool thing they have here is one of the things you're going to find out after you've been in the business for a while is that you want to go to direct lenders, because if you're going to another broker, all they're going to do is make the rate higher. They're probably going to do a lot of the same things you're doing. Once you get good at this, you don't want to have a rebroker deal. So one nice thing about the Scotsman guide, if you see in this little check mark here, it says proven direct lender. It shows you that they have their own capital, which means it's not a rebroker deal. Now, how they're proven, I don't know. I'd have to check with Scotsman guide. I've never done that. It does give you some other pretty good information. It tells you their minimum deal is a $30,000 deal, and I'm just looking at this Key Capital Mortgage right now. It tells you that their minimum deal is $30,000 and their maximum deal is $1 million. And their LTV is 70%, which means their loan to value means that's the max that they would go on the loan to value. So if at a property appraised at $1 million and they wanted a $700,000 loan, they would be good. Now, if they wanted it appraised at $1 million and they wanted $800,000, it wouldn't be enough because you'd only have 80% loan to value. The other thing it does is it has these little grid here, so it tells you. 1, they do purchases. 2, they do rate and term refinance. 3, they do cash out refinance. 4, they obviously don't do. 5, they do bridge loans. You come up here to 17. They're doing automotive, but they won't do gas. So it kind of tells you what they do and what they don't do. They'll do churches, synagogues, and temples. They will do, number 20, hospitals, or hospitality, hotels and motels. So it gives you a good idea of what they'll do and what they won't do. Okay, now let's get down. Oh, one of the other cool things is you can go right to their website. I haven't done this on Key Capital. Let's go to a Key Capital Mortgage. Let's see here. So this tells you a little bit more about them. So I'd definitely go to their website once you have a deal, and you can learn more about them before you make a phone call to them. Recent fundings. They just did a $300,000 deal in New York. When this borrower needed to repay for her office building parking lot, she wanted to use equity. So they did an office building parking lot. Anyways, they refinanced it. Let's see, key lender a $500,000 payoff, balloon note, paid off the old adjustment, gave her cash out. Some of these, if we look down close, okay, right here. Key Capital Mortgage closed an $806,000 loan on an industrial warehouse property in Queens, New York. Once our offer was accepted, I'm not going to read all this, but on the last line here it says the broker made $43,495 on the transaction. So now that's the very first one I pulled up on Scotsman Guide. Once again, I want you to look at my earnings disclaimer. In more commercial mortgage brokering, I didn't do a whole lot of that. I did most of mine in equipment. I did do a few deals, but it just shows you that there's a ton of money to be made in the business if you're out finding the deals and doing the right things. Let's see if there's any more. Key closes a $258,000 deal. Let's see if there's any more. Oh, okay, on this one, a broker made a fast $15,000. You can go to this website and check it out for yourself. Let me see if there's any more. Key closes $250,000. The broker made a fast $10,000. Now you might be wondering. I always say it's about a 1% fee for mortgage or for commercial mortgages. The reason that the broker might have made less is because even though the deal was for $250,000, when the customer's putting X amount of dollars of equity into the deal, it's only for usually 1% of what the loan amounts for. So that would explain some of this anyways. Let me see if there's any more here. And right here on this deal, $350,000 deal, the broker made $8,750. Okay, so we go through there, but let me go back to the Scotsman Guide, and we'll go to Velocity Mortgage, the second one here. Their minimum deal is $100,000. Their maximum deal is $5 million. They have a little bit of a higher loan to value, so they'll do 75%. But let's go to Velocity Mortgage's website. Okay, now they have a submission process for a new broker. Oh, by the way, a lot of national funding sources are going to require you to go through an approval process as a new broker. Some might not approve you. Some want you to be in business for a couple years. I'm just warning you up front. But most of them, at least in my experience, in commercial mortgages will do it. And actually, if you have a deal on hand when you talk to them, they're much more likely to take your new broker application. That's a little hint from the experience I have. But let me see here. Recent fundings here. A lot of these recent fundings we'll talk about. Okay, good. All these have a multifamily, $352,000. The broker commission was $14,100. West Palm Beach, loan size $204,000. The broker made $6,120. Loan size, a mixed-use building in Capitol Heights, $362,000 deal, $14,490 broker commission. But this Scotsman guide is a wonderful source. You can go down through all these. And just try to find a home that makes sense based on this matrix that they're giving you here, and the deal you have in hand. And as you're doing this longer, you're going to start getting a feel. Okay, this guy has a problem. They call it a storied credit. They have an issue in this area. Maybe that's why the local bank didn't approve it. But you'll start getting a feel for who to go out to. In the beginning, it gets a little more trial and error. You just got to send it out to more deals. So that's a pretty good source. Once again, I would still, if I got a commercial mortgage, I would go out to my local banks first because they're going to offer the lowest rates typically. And you're going to develop some relationships that are going to be reciprocal, where they're going to send you deals, just like that guy I had lunch with today who turned me onto a $700,000 equipment deal. So, okay, excuse me. Let's move over to equipment finance. And let me get to the right. I'm going to go to elfaonline.org. By the way, I have a pretty robust list of equipment leasing funding sources nationally that possibly in a future video that I'll go through. But you go through directories. Now, the nice thing about this, you don't have to be a member of the ELFA to get through this. So I got a funding source database right here. Now, you're going to go for search the buyer's database. It means they're buying the paper off you. That's why they're called the buyer. You're selling it. You're the seller of the transaction. Now, one thing I learned, I was fooling around with this earlier today. You have to put in one of these up here. This is the type of company you are, or the type of company that you're looking for. So if you're looking for a bank, and I'm going to leave it wide open here. These are the different types of lease structures that I get into in future trainings. And you don't have to don't let all this jargon, industry jargon, scare you away from it. It's easy to learn. It's probably a one-day thing, and you'd understand all this types of equipment. But I'm not going to put any search criteria. I'm just going to put in banks and search. And let's see what comes up. Okay, we had 39 banks came up that will do equipment finance deals. Doesn't mean all of them are doing broker business. Now, what's cool about this is you go through it, and you can see, and as I look through this, a number of these companies I'm already familiar with because I've either talked with them or I've done business with them. Fifth Third Bank, I sent them a $5 million deal last year. Let's just go through one of these. Let's go to BMO Harris, and I don't want you to get in. I don't want all this investment grade stuff and all this to bother you either. You got to find the deal, and then you got to find the right home for it. So you hit view company details, and this is where it'll get into the nitty gritties of what they like, what kind of equipment deals they like, and what kind they don't. Okay, it says it's a bank-owned equipment finance company. That's good because that means that they have their own funds. The type of funding source that they'll buy off as a lender, investor, an agent, a packager. I'm not sure if broker. It doesn't look like they're going to do broker business, but I'll take it through anyways. The highest transaction they funded was $50 million. The average is $5 million, and the lowest was $1 million. So if you have a $700,000 transaction like I found today, you can't take it to them. It tells you the longest lease term they'll go out, the average, and the shortest. Okay, tells you what type of equipment they want. Do they want? They like agriculture. They like aircraft. They like construction equipment. Seems like everybody likes construction equipment. They like industrial, intermodal. They like machine tools. They like marine. They like material handling. And then they'll consider these. The ones that prefer means that they're going to be favorable towards the credit. If the guy has a couple hiccups in a credit, they still might do the deal if they like the collateral. Okay, so let's go back and we'll pick a different one. Let's go to, let's see, Capital Source, Fifth Third. Oh, Financial Pacific. Let's see what they have. I think they're a high-rate lender. Bank-owned, small-ticket lender. I have a history with these guys from years ago. Probably in the mid-2000s I've talked with them. I'm not sure if I funded deals for them or not. They're funding A, B, and C credits to small businesses nationwide, covers most equipment types and industries, provides funding for higher risk credits to lessors who provide vendor programs. Just the nature of you being a business loan broker, you're going to find more risky deals than bankers are. So when a bank turns it over to you, it means they had a problem with it. But by that point, the customer knows what the new piece of equipment will do for his bottom line, and sometimes they won't care paying higher interest rates. Let's see here. The highest transaction they've done is $500,000. The average is $30,000, and the lowest is $5,000. So you can go through this ELFA online, go through directories, go into the funding source database, and just look through this, and you'll get a feel for what they're doing. Now, I did pull up one other. This was one of my. Let's see what comes up. Here it is, Marlin. Okay, I think I talked to you in an earlier video. A lot of times when you get deals that are under $75,000, it's application only. It means all you're going to do is pick up a one-page credit application. You get your customer to fill it out. You send it over to Marlin. Now, Marlin has some requirements as far as setting up new brokers. I'm not sure exactly what they are right now. The reason I bring this up is you can't just expect by watching this video and you call Marlin up tomorrow and they're going to approve you as a broker. They might not. I'm not sure where they are. I just knew that they had some type of requirements. But anyways, so you get your credit application filled out. You don't even need to package that deal. You just take the credit application. You do a short write-up. This company is located in Pittsburgh. They're going to be using this equipment. It's going to save them $5,000 a month in their production, whatever it's doing, just from talking with the customer. You send it into them, and, they're telling you some of what the credit requirements are. They got to have a 660 FICO score, a Paydex of 655. And this tells you a little bit what they go through. And let me see that other part. Let me just see if I can find that other part here. The broker application and Marlin and their rates. Okay. So on a deal over $100,000, they're charging a 7.25% rate for a premium. So they're basing it on the credit score of the customer you send to them. And this tells you how many points you're allowed to put in the deal. You can put 6 points in a deal over $100,000. On deals from $75,000 to $100,000, you can put 6 points in. From $50,000 to $75,000 at 8 points. From $30,000 to $50,000, you can put 12 points in. And when they're smaller deals, you can put up to 15 points in the deal for your fee. So I think I talked about that in an earlier video as well. But these are the types of programs that you're going to get sent from all these various funding sources that you start to build a database. And by the way, that's one thing you need to do. You got to, from day one, when you start talking to these, you got to have a CRM. I used to use Salesforce. I'm checking out Insightly now. Matter of fact, I'm thinking about doing a video on that. Just setting it up fresh and taking all these funding sources that I have and putting them in there. Then once you send it out to them, then you sit there and you cross your fingers and you hope you get an approval. And if you don't, then you move on to the next one. One of the things I teach you in my book is that you don't want to send out your deal to 5 funding sources at one time. Maybe I like doing one where I kind of, once you get a feel for the business that you kind of know is going to do it, but sometimes 2 and 3 on extremes, because you don't want to be sending these out all the time and not end up funding the business through them, because they frown upon that, and eventually they'll shut you off as a broker. So, but that's it. That's pretty exciting part of being a business loan broker. You find a deal, you package it, and then you send it out to one of these companies that I just showed you here on my computer screen. A lot of times it's to local banks. It's a reciprocal relationship. When they have a decline, they'll call you. You're sending them business. It's a great feeling. It's a great way to earn good fees. So please, I'm going to ask you that you leave any comments or questions. I love questions. When I get questions, I know what people are looking for. I like to respond to them either with a blog or maybe a video blog. And if you have the question, it means probably a lot of people have the question. But thanks for joining me. Hopefully this video wasn't too long. Thanks for taking the next step in your journey to a new life and to a new career. And I look forward to speaking with you again real soon. Thanks, and I'll talk to you soon.